8 minutes ago 9:06 Rising long-term sickness pushes workers out of labor market. COVID-19 is driving more workers out of the jobs market, experts warn. Today's jobs report shows 487,000 more people are classed as economically inactive than before the pandemic. That lifted the economic inactivity rate to 21.4% from 20.2% back in February 2020, and pushed down the unemployment rate. This trend is being driven by older workers, says Jake Finney, economist at PwC, with the 50 to 64 group accounting for more than half of this increase since the pandemic started. This group is suffering from higher levels of long-term sickness, with long COVID expected to be the primary new cause for this increase. We expect higher inactivity to become a permanent feature of the UK labour market, as around 6 in 10 of these older workers say they will not consider returning to work in the future. UK Inactivity ONS Resolution Foundation agrees, saying COVID retirees are leaving their jobs. The UK jobs market continued to tighten in early 2022, with vacancies hitting a record high, unemployment falling to 3.8%, matching its lowest level since December 1974, and short to medium-term unemployment falling to a record low. But the overall size of the labour market remains smaller than it was pre-pandemic. Economic inactivity increased again to 21.4%, suggesting that more COVID retirees are leaving the labour market. Britain's pay squeeze deepens despite unemployment matching its lowest rate in nearly half a century. Economist responds to the latest ONS labour market statistics. https://t/y40dsrq1xk Resolution Foundation April 12, 2022. This chart shows the rise in long-term sickness. UK Inactivity ONS Stephen Evans, Chief Executive of Learning and Work Institute, says some people are leaving to care for others, as well as retiring or being ill themselves. We continue to see people falling out of the labour market altogether, especially carers, retired people and long-term sick. Employers are crying out for staff, yet there are 1.25 million fewer people in the labour market than if pre-pandemic trends had continued. The government must act swiftly to support people who are being hit the hardest, so we need a new plan for jobs, growth and living standards. Updated at 9:07 BST. 34 minutes ago 8:40 Political reaction. Minister for Employment, Mims Davies MP, points out that the unemployment rate has fallen to its joint lowest level since the 1970s. With the unemployment rate returning to the lowest we have seen in nearly 50 years, it is clear our plan for jobs has worked, protecting livelihoods and businesses throughout the pandemic. Behind these ONS figures, we know this is a difficult time for many workers and families. We're doing everything we can to help, with our Way to Work scheme, which is supporting people coming through the doors of our job centres to move into better paid, higher work, as well as increasing the national living and minimum wage, all backed up by over £22 billion of targeted investment. But Pat McFadden MP, Labour's shadow chief secretary to the Treasury, highlights that last month's spring statement failed to give as much support as hoped for struggling households. Today's figures show that Conservative choices are leaving real wages squeezed and people worse off. At a time like this, Rishi Sunak could have chosen a one-off windfall tax on huge oil and gas company profits to cut household energy bills by up to £600. Instead, he's decided to make Britain the only major economy to land working people with higher taxes in the midst of a cost of living crisis. Lack of help from Rishi Sunak for struggling UK families will push 1.3 million into poverty. Updated at 8:41 BST. 42 minutes ago 8:32 Capital Economics. Labour demand softening, and wage squeeze will worsen. There are some signs of softening in demand for labour in today's jobs report, warns Ruth Gregory of Capital Economics. Labour demand was a bit weaker than we expected at the start of the year. Admittedly, LFS employment still increased by 10,000 in the 3 months to February, up from -13,000 in January. But the single-month data showed that in February itself employment fell by 89,000. In the 3 months to February, the unemployment rate fell from 3.9% to the rate of 3.8% seen before the pandemic. That further fall reflected a rise in inactivity of 76,000 in the 3 months to February, driven by more people saying they were retired, looking after family, home, or long-term sick. March's claimant count and HMRC pay employee data were also both a bit softer than in recent months, perhaps as the war in Ukraine and higher inflation began to weigh on domestic activity. But the number of people claiming benefits still fell by 46,900, pushing the claimant count rate down from 4.4% to 4.3%, and the number of employees still rose by 35,000. What's more, the mix of decent demand for workers and a diminished supply of workers pushed up the number of vacancies to a new record high of 1.288 million in 3 months to February, and maintained the upward pressure on wage growth. Gregory also warns that real wages could fall by 3.2% by April, from the 1% fall in December-February, as rising energy bills drive inflation over 8%. 53 minutes ago, 8:21 Ben Harrison, director of the Work Foundation think tank, says today's jobs report shows the need for more government help for struggling households, especially those relying on universal credit. Today's statistics shows a mixed picture for the UK's labour market recovery, with employment stationary at 75.5% and unemployment dropping to 3.8%. However, the vacancy rate remains high at 1.3 million, and economic inactivity continues to rise to 21.4%. Crucially, workers and job seekers are being hit by the largest fall in living standards on record as inflation outpaces wage growth. Many are struggling to make ends meet as regular pay growth is at 4%, but inflation continues to rise, with the Bank of England predicting inflation will reach 8% in spring and could rise further later in the year. The Chancellor's spring statement failed to provide economic security to the most vulnerable in society, including those in low-paying and insecure employment. Universal credit beneficiaries saw their benefits operated by just 3.1% in April, lagging behind inflation. The Chancellor must return to dispatch box and, at a minimum, raise universal credit in line with predicted inflation to provide security to those at the sharp end of the cost of living emergency. 1 hour ago, 8:07, although there are over 500,000 more UK workers on company payrolls than before the pandemic, total employment is still 558,000 lower than in February 2020. The number of employees on payroll continued to grow in March 2022, and is now 544,000 above its pre-pandemic level. https://t/z30qpgp mg LJG8KN Office for National Statistics April 12, 2022 Total actual weekly hours worked reached 1.04 billion in December 2021 to February 2022, 18.8 million up on the previous 3 months. However, this is still 14.6 million below pre-coronavirus pandemic levels. https://t/z/t/squares@txcg1nigvg8gzhni0 Office for National Statistics April 12, 2022. 1 hour ago, 8 o'clock ONS. Basic pay falling noticeably in real terms. Basic pay is now falling noticeably in real terms, says Darren Morgan, Director of Economic Statistics at the Office for National Statistics. Here's his summary on the jobs report. Overall, employment in December-February was little changed on the previous 3 months, and so is still below its pre-pandemic level. While unemployment has fallen again, we are still seeing rising numbers of people disengaging from the labour market, and as they aren't working or looking for work, are not counted as unemployed. Early estimates suggest there was only a small increase in the number of employees on payroll in March, while job vacancies, although again at a record high, rose at their slowest for nearly a year. While strong bonuses continue to mitigate the effects of rising prices on people's total earnings, basic pay is now falling noticeably in real terms. Commenting on today's labour market data, ONS Director of Economic Statistics Darren Morgan said #. URSUG0CHX Office for National Statistics April 12, 2022 Continuing, Darren Morgan said #. PYRURUTTCU Office for National Statistics April 12, 2022 Darren Morgan added #. EU0FKN8CHW Office for National Statistics April 12, 2022 Darren Morgan concluded #. 3T65 OUUEOL Office for National Statistics April 12, 2022.